If 90% of traders fail and 90% of traders don't use option data, well, then it might be correlated. Correlation doesn't mean causation, but price action alone can be tricky. Option data tells you when the move is about to happen. If you can understand this as a trader, you can time your moves. If an institution decides they're going to make a large purchase, this is exactly how they will do it. The market will open and the institution will aggressively sell. It's not because they're bearish, but they're liquidity hunting. Some people call this stop hunting, some people call this a fake out, but it's what they're doing, liquidity hunting. They're trying to activate where the people are going to get onto the opposite side. If they know they're going to buy, they want to get people to sell. Institutions aggressively sell, and liquidity is activated. That's what I'm talking about in liquidity hunting. Next, the institution will buy calls for cheap. This is the cue for the people who could see it. If you could see this and think like a liquidity hunter, you'll be able to spot things when they happen. So the first thing that institutions will do before they purchase a bunch of shares or futures to send the markets higher is they'll buy calls so they can make money on the upside because they know they're about to do it. They know their order is big enough. If you can spot that by watching the option data, you'll have an advantage. And this is where experience comes into play, because if you just watch it for a few weeks, you might not have a full understanding of what it will look like. And what it looks like when it actually happens is pretty significant. So after they buy calls, they'll buy SPX shares and futures all day. And you could trade SPY and stuff. And this is probably what it will look like. There'll be a sharp decline in the morning. That's them aggressively selling. And then there's algos and all these type of things. And then basically what they do is after they enter the calls to purchase their position, it won't just be immediate spikes up. It won't just be green candles, large squeezes. It'll be algos triggering VWAP and TWAP, time weighted average price and volume weighted average price, so they can get good fills. So they don't just purchase $200 million of stock at once or futures, so they can grind higher throughout the day. And you'll see the same thing when they're ready to sell their position. Just how they purchase the calls when they know they're about to buy, they're going to sell the calls when they know that they're about to be done. And so you have to think like a liquidity hunter in order to see these things. And if this is the only way that you can get a cue on this, I don't know if the institution is going to execute $200 million of stock. How am I supposed to know? All I could do is have my own speculations, see where the stops might be, understand that if calls are being bought while the stock is falling hard in an area where liquidity might be activated, well then that might not be retailers. That might be bigger money actually playing this game and getting ready to send the stock higher. So option flow provides more precise data of timing and direction than the underlying assets flow. Investors who aren't timing moves are mostly the people who make up the flow of the actual asset. Options is for timing. So you have to take that into account when you're looking at things like the time and sales or the tape or even like the order book. The order book will tell me where a wall is, but it won't tell me when it will get there. The options data, for me personally, will put something on my watch list. If I see large option activity on a stock, it'll simply enter my watch list if I already have it on my watch list in my blue chips and the things that I trade. For example, I get 50 notifications a day of option activity, all type of tickers. I only care about the blue chips that I trade, things like Google, Nvidia, MSTR, the good stuff, the really liquid names. And so if genuine large unusual option activity pops up, it'll enter my radar. And I'll open up the chart and I'll see what's going on. I will never make a decision based on option activity or a chart. I'll always try to get in cheaper than the whales and try to time it better. I'll watch open interest to make sure it's turning into, or I'll watch volume to make sure it's turning into open interest. And that's how option markets are way more precise for timing and trading than just regular flow, because flow only tells you what an investor is doing, or you don't even know really what's going on. With the option data, you could see the price they're targeting, the time they're targeting, and that's really the most important, and the premiums if they're scaling in, and how much someone's buying, which is super duper important. And this is really talking about like SPX flow and option volume, but my strategy is really based on option volume and flow. If you don't have that, you could be losing money, and it's a very important tool, I think. Understanding this could be the difference between somebody who's an intermediate trader and literally getting up to the advanced level, because understanding option flow is absolutely everything, and it's something that nobody teaches.